Really had a great run over the last 4 years. We've had industry-leading growths. Our profits have grown beyond revenues. We had a lot of non-linearity, a lot of new things that we've brought to market have been really compelling, and we're doing well. So if you ask me, am I going to change something fundamentally, the answer is no. I think it's just re-articulating our overall value proposition, which we did in the analyst conference in Mumbai in August. It's really about how are we going to pivot around the inflection points in the industry, whether it is the emergence of digital platforms, ERP on the cloud, data explosion, how that is going to be driving predictive analytics, artificial intelligence, and IoT works, and all the devices and the connected ecosystem. And of course, the most important and very strong fundamental component is how is the infrastructure landscape changing, where infrastructure is becoming invisible, software defined, public cloud, and some of these things. And how can we really re-articulate our strategy and be very, very sharp about pivoting around these inflection points. And that's really the tenet of our mode 1, 2, 3 strategy. Sure. And each one is like our mode 1 is very, very focused on agile and lean, trying to take costs out predominantly around the non-discretionary spend of our customers. Mode 2 is really all about disruptive spends. It's not just non-discretionary, it's all about how can you kind of fundamentally transform your business? How can you reimagine and rewire your business?
Sure.
That's where our Beyond Digital, IoT works, and propelled by cloud and security solutions is really coming out as a very differentiated proposition in the market, which is just not implementing smart technologies or just not migrating to cloud and things like that. It's how you can use design thinking and digital technologies to transform or reimagine businesses.
Okay.
And mode 3 is really future-proofing our business.
Of course.
It's about products and platforms. As services get commoditized, can we build a very innovative and creative revenue stream through strategic partnerships, which will future-proof us for the next several years.
Okay, and I'm sure we'll talk more about this as well during the course of this interaction. But Anil, it will be a different experience for you once again, working with a new CEO too. But let's talk about the quarter. And of course, I'm sure you've worked with him a number of times now. But let's talk about the quarter. You know, when I looked at the numbers optically, I thought, hey, 1.6% versus expectation of 2%. Is there a small blip? Not that it mattered because you've reiterated your guidance, but constant currency, you've done well. More importantly, the EBIT margins have held out better than what the street was working with. What's gone right this quarter?
So I think everything is going right this quarter. So if you look at from a, as you rightly said, 2.8% quarter-on-quarter growth in constant currency terms, on top of 6% what we achieved last quarter.
Right.
And all service lines grew. So infrastructure, of course, was leading at 4.4%, but you look at applications at 1.4%, particularly helped by the digital side, the modern applications. And then we look at the engineering, 2.3%, the BPO at 2.1%. So each of the service lines grew. And not only is also depicted in the very unusual sort of a thing which is happening within the verticals. Look at 5.6% growth in the financial services, quarter on quarter.
Sure.
Yeah. So.
Yeah. And I think that's interesting, and you know, I want to talk Vijay about it, but Anil, just come in, you know. So my question to you is, a lot of people were anticipating that the PAT number could be lower than what even the polls suggested, because there could be lower other income, the wage pressure would kick in and will impact margins as well. You successfully managed to, you know, outdo those expectations. How has that happened?
So a couple of things. A, we have been able to maintain our margins. I mean, except that 40 basis point impact on account of the wage increase.
Which is lesser than what the street was working with.
Yeah, it's lesser because partially offset by the efficiencies in the business, the use of dry ice. I mean, all those factors led to a better result than what, what could have been just because of the impact of the salary increase.
Okay.
So, and even the other income held on.
Okay.
So net, I mean, it was a good quarter. And even if you look at one of the very key features is the gross margin, which has improved year on year. It used to be 33.2% in July 15 quarter, in September 15 quarter, and September 16 quarter is 33.6%.
Sure.
So it's pretty good.
Okay. So Vijay, talk about either the verticals or the engines which are working, because I think I'll talk more about application services, but by and large, IMS has kind of returned to the fore. Obviously, you can't reenact what you did in quarter one in terms of percentage growth, but it's been a healthy quarter too. Tell us about it.
Yeah. So if you have to really break down our results, first let me do it geography-wise.
Sure.
I think US continues to be really knockout performance. We had probably 5.5% quarter-on-quarter in US. That's a big thing. Europe traditionally has been good. Last quarter was a phenomenal quarter for Europe. I think we grew something like 16 or 17%. On back of a 16-17% growth, there is a slight decline in Europe. But I think our year-on-year numbers look good, and we continue to be positive. Though there is a little bit of softness in the pipeline in Europe, I think it's a little bit of focus. We would continue to do well in Europe. In terms of service lines, of course, infrastructure continues to be growing. We grew 4.4%. But I think what is very, very critical to note is our application services business has grown 1.4%. And if you have to really break this down, as I kind of pointed out a couple of months back, some of the traditional spends on ERP and things like that are coming down. And if you really look at our digital revenues, it has significantly contributed to this 1.4% growth. So I think because it's on a $2.5 billion kind of a size, digital could have grown very well, but it would still show up as a 1.4% growth. Our engineering services continues to do well, and our strategy there is while we are focused on organic growth, but we also see a lot of consolidation opportunities on the engineering services side. There are a lot of small niche players on segments that we want to really focus in, and that's an interesting area. And this quarter we've announced an acquisition as well. In terms of verticals, I think that is really it's a great story. Financial services, quarter on quarter, it's grown 5.6%. And if you look at some of the other verticals, life sciences and healthcare, public services, retail CPG, where there is a lot of skepticism in the market, quarter on quarter we grew 7.7%. So financial services and retail CPG are very good. We had very good traction last quarter. And if you really look at on a Y-on-Y basis, it's life sciences and healthcare, public services, telecom, media, all of them are doing well. So I would say it's a pretty broad-based growth in terms of geographies, in terms of service lines and verticals. And I think this broad-based growth is what is continuing to give us the confidence, and that's the foundation of why we continue to reiterate and stay with our guided range in terms of revenues.
A question on two verticals, which are not just about FY17, but the time ahead. One, will BFSI continue to remain as strong? A lot of people are skeptical about that. And two, manufacturing, aside of an odd quarter or two, for the industry at large, is not showing that traction. Is that something that will last?
So let me start with the financial services, right? Financial services, I think it's quite known. There are lots of businesses which are a little bit stressed at this point in time, either due to their internal reasons or due to some structural reasons in the industry. Our presence in BFSI is again pretty broad-based. Like we've been generally talking about our portfolio is broad-based, but if you look at financial services, we have presence in capital markets, banks, we have presence in insurance, and we do have a good presence in fintech companies. These are the companies which are growing 30-40% year on year. Some of the smaller fintech companies where technology is really at the core of what they're doing, and that's where we are present. So in the financial services, while there is stress on reducing cost in the non-discretionary component and some of the discretionary spends, people are kind of being a little bit cautious and postponing some of the discretionary spends.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNow Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.